Hello and welcome to the 21st day of November 2012, and we got three different things in today's video. One are some notes that I seen in a video earlier today. Two articles posted November the 20th. One is real, one is fictitious. I'll let you decide which is real and which is fake. And then we'll take a look at silver on the daily chart. Show you why 33.5 should be the next level of resistance. And well, let's get started. Government is complicit in this counterfeiting system. This is from a video from TruthNeverTold. Now look at these 5 notes and how simple this really is, but how you have to, for the most part, at least myself, you have to sit back, clear your head, and think, this is totally correct. So they create the legal tender laws. You look at a fiat note. This note is legal tender. They charter and regulate the banks, obviously the banking system, and that comes to the fact of knowing how fiat currency is created. They use courts to enforce debts, which is obviously a no-brainer. They collect taxes using only the legal tender, and it even goes further than that. If you get, say you get penalized in some form, you get some sort of fine, suspension, it has to be that of legal tender, and all payments, in fact, are in such that case, and they never educate the public on money, and that lack of education has pretty much got us to the point where we are today, via my opinion, and I would have to guess many or some others. The next one was the legal tender laws protects the value of the fiat by making it illegal not to accept it in repayment of debts. If I want to open a store and put the sign, fiat currency not accepted, all trade will be conducted in gold, silver, and maybe another note stating, please inquire about any other hard/tangible assets for trade, and so forth. You know, that just wouldn't work because of the laws. Next one. It also forbids competing currencies that would be a threat to their system. There's the exact example as I was saying. The government benefits from the system because they're never short of money to buy them more power, which is just the simple fact in the creation of such. And there we have money as value and money as debt. There are 2 outstanding videos, really 3, but as far as good educational ones, money as debt, as well as Zeitgeist Federal Reserve, that explain the debt-based system, I think, the easiest for, people to understand. So this is done again by the Truth Never Told channel. The video is SOLA 5.6, Usury and Religion. There's a lot of quotes, or Bible quotes, I should say, in regard to interest and such. And as I've been stating for so many times, in the simple math, and then the Zeitgeist Federal Reserve explains it very well, is the simple mathematics that it can only guarantee debt when you thus charge interest. And as I state, only the central banks are able to mine the fiat currency, and I use the word mine in a sense of way of making, and I guess mining would be used for something else. Anyway, on to 2 articles. These are both dated on November the 20th. I'm not going to read them. In fact, I'm only going to display them for about 4, 5, 6 seconds. If you want to read them, you can pause the video. And here's the first one. Second. Alrighty, so now let's move on to silver. And this is the daily chart. 33 1/3 is the price. Now I can open this with Paint, and the Paint program will bring this up for me to make it just a little bit easier for me to use the drawing tool that I use in these videos. So this is what we're looking at. And the pattern that I say that I'm looking for is a decent sized breakout, and it's approaching, and I say 33.5 is the level I expect it to reach this afternoon. What it does from there, I don't know, but I would expect there to be a decent chance of an area where resistance may be found. With that being said, as I state, you got to either make a nice clear breakout above and then come back within this band, and then establish a break of the resistance that happens to be established, that's one indication to stay, okay, we're bull market, yeah. Or just really break through and just go. And the example of that, of course, is right here. It just went. That's the example for bringing this into a bull market. And the 18 average, front-weighted average of highs, lows, and closes band makes it very much easy, at least for me. So 33.50, where do I get this number from? Yesterday, I didn't make a video for this, but I did post this on my channel where I put the directory for the images. The link, of course, for that is always in the more information box. But as the market closed yesterday, 33.17, so 15 cents, 16 cents lower from where it is as I'm doing this, had a decent looking pattern, to say the least. As within this band itself, on the decline here, there's your stabilization period, there's your come up to this level. Then it comes back, so now it just has got to break this resistance. It did, but obviously did not do it, so this is where it got bullish, because this was a successful correction. Yes, it did go below the 18 average of lows, but nothing to disrupt the uptrend of it. So therefore, we also take a look at that within the Fibonacci retracement. There's the 38.2% that was resisted. It resisted again, but broke it through, support. So now it seems as if it's a no-brainer lock, that it's going to be hitting the 33.51 level. No, I can't say what's going to happen there, but I'll go through the exact same stuff that I've said in the past, that if it doesn't find resistance here, then, and you start to notice this thing really probably breaking 34, that there's some sort of actions going on, and you might want to consider this to be legit, this making a test of the highs from the end of September, start of October period, as one of the possibilities. And that's if it just breaks it big. Also, if it does, then you also look for support at this level rather than resistance. If this level is resistance, then the next significant Fibonacci retracement would be from this low to this high, which would happen to be here. If it does top here, the 38.2% level would work out exactly at 32.39. And so I'll quickly go back to the daily chart. And then when we take a look at this again, I want to go over this here. This was the lowest volatile day since the 4th of July. And I'm going to bring yesterday's chart to show you more on that. Yeah, this is the 4th of July right here. And Bernanke spoke yesterday. At least he might have. That might have been fictitious too. You can check that out. Anyway, thank you for tuning in, and all the photos that you've seen in here are in the link down below from the directory. Look for today's date, and today's date is the 21st of November. Take care. Bye-bye.